China is not the success story that you think it is. For decades now, we were lied to, deceived by the CCP into thinking that they had done the incredible and built a nation up from nothing in a way no one else could. For years, we thought their GDP was growing faster than anywhere else, that they were so technologically advanced that not even America could keep up, and that this was a trend that would continue forever. Now we know the truth, that China have lied about their GDP figures for years, and their economy is almost 50% smaller than we originally thought. Now we know that in comparison to South Korea and Taiwan, their advancement isn't impressive at all, and that for the first time in decades, their population is actually shrinking by over 1 million a year. But all of this pales in comparison to the disaster which is the Chinese housing market. I know you've heard this before, you know the name Evergrande, and you've seen the videos of the numerous ghost cities littered across China, but humanity's attention span is short, and the media feigned interest at first, but is now happily ignoring everything that's going on as we speak. The truth is that the Chinese housing market is collapsing right now, that the dire state of it has been building up to this point, and it may be about to fall apart in a far more damaging way than you could possibly imagine. There is leaked information coming right from China itself and from the highest levels of government that reveals just how insane this situation is, and you need to see it for yourself. Now, for those out of the know, where did this all come from? Well, it started with official Chinese state policy decades ago to try and stimulate economic growth by simply building as much as possible. Railways, roads, dams, factories, anything and everything, but of course there was a massive focus on apartments and cities to try and get the Chinese population to urbanize so they could create more wealth. This construction wasn't free though, it was funded by insane and ridiculous levels of debt that just kept being added to, with some of the laxest and weakest regulations the world had ever seen. Chinese property developers quickly built themselves up to be the largest in the world, but also the most indebted in the world as well, and they weren't happy only with building apartments in established cities like Shanghai or Beijing. In an attempt to maximize their earnings, they built entire new cities altogether and sold brand new apartments in these cities to unsuspecting investors. Little did the average Chinese mum and pop landlord know that no one lived in those cities, and no one wanted to either, and no one was ever going to. So we ended up seeing another problem: ghost cities in China, which only made the property bubble even worse. The bubble started to get very visible a few years ago, and the Chinese Communist Party decided that enough was enough and this bubble had to be stopped from growing, as if it didn't, when it finally came down, it would bring all of China down with it. The Communist Party put into place the 3 red lines policy, which sought to limit the amount of debt a Chinese developer could have, and despite the fact that these rules were still incredibly lax and even reckless according to Western standards, hardly any Chinese developers could abide by them, so suddenly the debt that was fueling all of this growth, construction and the entire housing market stopped in an instant. Developers had no cash, and they couldn't take out loans to finish their projects, and they couldn't even pay off their loans either. So these property companies started to collapse. This started in 2001 in the months following the 3 red line policy, but it took the legacy media almost an entire year to start reporting on this at all. Now there have been many financial crises, but 2023 is shaping up to be a year of lost wealth, as every day the economy goes from bad to worse. Take this survey that revealed more than half of Americans who make 6 figures are now living paycheck to paycheck. Even college-educated young people with high-paying jobs are struggling to do basic things like pay for their rent and car payments. Then there's the tens of thousands laid off in recent weeks, and a clear financial storm is brewing, and no one is safe. It's pretty hard to feel secure in your job when Jerome Powell is actively trying to bring the labor market to a screeching halt as inflation proves stubborn. At least Goldman Sachs, though, are being honest with clients about where they think the market is headed: nowhere. But if you think hedge fund CEOs and financial titans are letting their money just sit in savings accounts, think again. They're pouring hundreds of millions into assets that aren't necessarily correlated to the stock market, so if stocks stagnate as they expect, these assets can continue to grow. But how can we invest in low correlation assets? Well, I actually spent some time digging, and according to a report by Citibank, the asset with the lowest correlation to the stock market was contemporary art. That's right, art prices have more than doubled the S&P 500's return over the last 26 years. Now, this market used to be hard to get into, but Masterworks is the platform that lets you invest in multi-million-dollar paintings without breaking the bank. Masterworks has built an impressive track record of 11 exits, all of them profitable. These numbers speak for themselves, but with those kind of results, Masterworks have seen over 650,000 members try to gain access, so there is a waitlist, but I reached out to them to give you all VIP access to the latest offerings. To skip the waitlist, just check the description down below. Now, Lu Xu from China is a senior researcher at China Index Academy and has spent the last year combing through public releases, financial data, and private documents in an attempt to reveal just how bad the property developer collapse is. Official data on this crash is really hard to come by, as the Communist Party refuses to put out their official figures, instead claiming that the property market will see a steady recovery under the watchful eye of the communists, but the truth doesn't look so positive. According to Lu Xu, there are as many as 30 multi-billion-dollar property developers in China that have already defaulted on their debt, and that number keeps getting bigger every month. Of the 10 largest developers in the entire world, 4 of them are Chinese, and 3 of those have already defaulted, including the 2 largest property developers in the entire world, Evergrande and Sunac. But there are dozens more out there which also owe tens of billions of dollars worth of assets each that have also gone underwater, including Guangzhou, Country Garden, China South City Holdings, and Fantasia, some of the biggest names in the world. Bonds issued by these companies are worth literally cents on the dollar, and the prospect of investors getting their cash back is close to zero, but that isn't even the real problem here. The real issue is that China's economy is entirely based off of construction and not manufacturing, as most people would believe. Without these developers and without the industry, over 100 million jobs will disappear and China's growth will reverse in an instant. The Communist Party's aim was to stop the bubble from growing to gently diffuse a delicate situation, but they are currently finding out just how disastrous that process has gone. Faith in the Chinese property market has disappeared, so a crash in prices has started, and hundreds of millions of Chinese citizens have found themselves underwater on what they thought was a safe retirement plan. Over 2022, a mortgage boycott movement spread across China, and still to this day it is growing steam and proving unavoidable for the powers that be. Suddenly, after months of trying to bring the housing market down to bear, the CCP realized they had screwed it all up and the bubble wasn't about to stop growing but pop altogether. It was at this point that everything changed in China once again, and they took a leaf out of the West's playbook and started to print money, trillions and trillions of dollars worth, resorting to trying to inflate the very bubble that will one day destroy the entire country. So the Chinese money printer has now been turned on and it's currently at full speed. The chief of research at the Bank of China just a couple of months ago came out and said, "We must boost domestic demand, consumption and investment, and we need to stabilize the property sector." And that's exactly what they've been doing throughout the entirety of the last year. Now, getting facts into the exact amount of stimulus the CCP has put into play is nigh on impossible, but every month or so we see another 1 trillion yuan package put into place that promises to be the final bit of support before it is quickly surpassed the following month. Over the single month of January 2023, the Chinese M2 money supply increased by 7 trillion yuan alone, which is more than $1 trillion US, and that's in a single month, and it's a trend that is not slowing down at all, as can be seen by this data here that the CCP can't hide. The state of the Chinese economy is so worrying to the CCP that at the end of the last year, they finally announced an end to their zero COVID policy, which has been so integral to their governance for 3 years and was essential in maintaining control of the country and its populace, but it was so restrictive and damaging to the economy that even this had to be done away with in a last-ditch attempt to keep the economy moving and stop a depression from forming. The housing bubble is now being inflated as quickly as possible, with new policies going into effect which are nothing short of ridiculous, with just one example being the fact that people in China can now get mortgages at the ripe old age of 70 years. The upper age limit for a mortgage tends to be retirement age in the West, which means if you're 50 you can't really get one anymore, but in China it is 95 85 years old when the vast majority of people will never even get close to living for that long, showing just how desperate the Communist Party is to get anyone and everyone buying properties again and to try and stop this housing market crash. All these changes really do, though, is ensure the Chinese property market is doomed to an eternity of boom and bust cycles, with each one getting worse and causing even more damage. The solution to the problem, according to the Communist Party, is the thing that caused the problem in the first place. The lack of foresight is literally incredible, but it means that despite all of these efforts, the situation is proving too much for the CCP, and leaked data is emerging from the country suggesting that things are still going downhill and fast. According to the Communist Party and their own official data, house prices across China are down only by 5.5% since this property market ordeal started. But that right away should be throwing up red flags, as the amount of support the CCP has given to this sector and the fact that trillions of dollars worth of companies have gone bankrupt would lead us to believe the situation is far worse, and it is. A more reliable survey of new home prices across China that isn't gathered by the Communist Party shows a sharp decline over the last 2 years, and it also shows prices falling by 1.5% every month throughout 2022 and into 2023 as well. Now that alone would mean housing prices have fallen by about 10% over the last 6 months, twice as bad as the Communist Party claims it has been over the entirety of the last 2 years. China's number of new home sales has fallen by 14% over the last year alone, according to the actual data coming out from those property developers still alive in China. And over the most recent Chinese New Year week-long holiday, which is historically a booming period for China's home sales, the number of sales we saw was 32% lower than in previous years. These numbers are even worse when you consider the fact that Chinese real estate is the world's largest asset class, sitting at $55 trillion, and the industry behind it makes up as much as almost 30% of Chinese GDP, so even a 1% decline in the industry represents losses of hundreds of billions of dollars, and by all accounts the market is down in the region of 10 to 20% over the course of the last year. How this will actually affect the rest of the world, who really knows, but China clearly thinks the way forward is to try and inflate themselves out of a bubble, and anyone with even an ounce of foresight can see that that isn't going to happen. Of course, the CCP doesn't want anyone to know this, not those within China nor those of us outside, but some data will always seep through the cracks and give us an idea into how badly things are going. The housing market for China had been a boasting point for years, an industry to rival that of the West's, an investment asset to beat that of America's, and trillions of dollars of wealth spread out amongst its citizens, and more importantly the Communist Party, thanks to their housing market. But it was all a house of cards and an illusion. China will do anything it can to stop you from seeing through their illusion, because the second you realize the real state of things over there, that's when you also realize the true nature of the country as a whole. Unfortunately, YouTube has a soft spot for China and a nasty habit of demonetizing or outright deleting content that is critical of the Communist Party. So if you want to see more data examining exactly how China's housing market is imploding, then in exactly 4 days I'll be sending out an email to my free newsletter revealing all, and you can sign up for it with the link down below in the description. Or if you want to watch another video analyzing the chaos in China, then click here, and don't forget to check out this video's sponsor Masterworks with the link down below in the description.